I'm going to bring in now Osaic, their chief market strategist, Phil Blancato. Phil, before we even get to sort of the seasonality stuff, your thoughts on boom. Everyone says, yeah, there's a boom. You've got one camp that says it in a bad way. President Trump saying no. Later on this year, everything done right, we could have a boomtown USA.
We got tomorrow, this big day about tariffs. And certainly from the data you just showed, there's this concern about prices going higher and growth flattening out. To me, I just don't see it. And the reason why, we went through multiple years of ISM and contraction, so this is nothing new. But go beyond that. You look at the consumer today, you look at the latest round of data suggesting where the consumer's at, from unemployment, from job growth. Jolts today said there's still plenty of jobs available. We're just not seeing the fracturing of the end consumer. And here's the most important point. If we don't see any real spike in inflation and we see this continued downward trend in energy, the consumer will continue to be in strong shape. And for that, yes, March is a tough month, but we will grow further out of that. Speaking of March being a tough month, post-World War II, anytime that March was down more than 3%, April, every single time has been higher. That just kind of shows you, I mean, again, obviously different scenarios, but this covers from 1980 to 2020. Almost every kind of variable is factored in there, and it shows you we can get oversold and come back pretty quickly. Generally, the first quarter is the second worst quarter of the year. March is the third worst month of the year. Seasonality matters. What's the other ones? Obviously, August and September. So to me, when you see these moments of great sell-off, finally you're getting the Mag 7 at prices that seem somewhat reasonable. So for that reason, this is not unusual, the buy the dip mentality. Right. Market's up every 3 out of 4 years, so you're finally getting a chance to buy stocks a bit cheaper, just a bit. One of the issues, though, and this is, I think, for me, more concerning even than the sentiment stuff, guidance so far. First quarter guidance, 110 companies guided. This is from Jefferies. 54% negative guidance. You got to go all the way back to the first quarter of 2015 to find a similar scenario. Are you beginning to get worried at all about this? Not yet. Just like ISM, some of that has to do with tariffs. This is all tariff related. The uncertainty around what tomorrow brings and then the impact. If tomorrow's worse than we expect, then this is a real number. We're going to be concerned about a sideways and down market. If tomorrow's not as bad, then that's not the case. All right, so then you've set it up pretty good here to be a buyer. Yes. Right. You want to take advantage of this. You got some names you like here. Costco. I feel like you've liked Costco for a long time, but again, what's not to like? Well, let's go back a second. Everyone's worried about the S&P 500. It's down 5%. Do you know what's not down? Large cap value stocks. They're up 1 to 2%. Companies like this that pay a wonderful dividend, have $11 billion in cash, about 90% recurring revenue rate. 90. That means people sign up, never leave. Find me another business that does that. This is an anchor in your portfolio. So if you're worried about tariffs, you're about to slow down the U.S. economy, this is how you protect yourself. When Sam Walton was alive, he said that was the only company he couldn't beat. He was always frustrated about that Costco. He told Overview, he said, listen, I just can't get them. Even Sam's Club never could get that magic that Costco has. Price and quality. Price and quality. Plains All-American Pipeline. Was this all, used to be Plains Resources maybe? It did, well, it's off. So why I like this is, one, they're cheap. Compared to their peers, they're very inexpensive. But this is it again, for a lot of your viewers that are worried. They're sitting there watching the market sell off. NASDAQ's down 15% at its peak. The S&P's down 10. Okay, the Mag 7 are getting crushed in certain classes. How do I prevent? Dividends make it real easy to smooth out the bottom. Right. Now, if we're going to get an energy boom and we really become this fracker of all frackers, which we're well on our way to becoming, we become the source of natural gas in the world, this is how you play it. And even if they don't get bigger than what we are, you're looking at a dividend yield, very cheap to appear, so you get growth and dividend, a great way to shield your portfolio. And the stock's almost PAA. Yes. Right? And the last one is Goodyear Tire. Fun one. This was an interesting one. This got me really interested here. This right here, they're making tires that help with EVs be more efficient. Here's what's cool about these guys, too. They're somewhat tariff insulated. Most Americans buy tires made here. They do have production well overseas where the tires are bought there. So you're tariff insulated and a company that's being futuristic in its mindset. All right, great stuff. Good to see you, buddy. Always appreciate you, especially in a week like this. Liberation Day Eve. Don't panic. Talk to you again. Don't panic, folks. All right.